Good morning, folks, and welcome to Best Stock Charts for the coming week. It is the 29th of November. What I want to do is a quick update on our positions and our watch stocks from over the weekend. I mentioned over the weekend on Best Stock Charts, I'll link to that at the end of this video, that I believe that Live Nation was going to proceed higher this week. This is a weekly chart. We did get that breakout, and we are trading at current at the highs of the week. So a nice breakout here. This is a stock that we would look to stay long of. Daily chart, a continuation breakout of a bull flag formation. It broke out on Monday, followed through yesterday. Well, I would caution that the IWM, the Russell 2000, and the Dow Jones Industrial Average all went out pretty extended on the day, so we may see a pullback this morning. The shares of Nectar, NKTR, we booked profits on our position early in the week. You could see that we went into the week with RSI at about, on a daily basis, let's go to a daily chart, on a daily basis, about 95, just shy of it. And we pulled back on Monday and we booked our profits in that trade. We are now building a new short position in this trade once again. We do have a price target where I think it can head up to. This is a weekly chart where we will look to add aggressively at that price point. Healthcare, I mentioned it might break out this week over the weekend, and it did. We have a breakout on the week. We'll be looking to build a position here, daily chart. A strong day yesterday, but we are leaning into the third standard deviation Bollinger Band, a bit extended. I think we'll get a brief pullback, and that's an opportunity to begin building positions. EWC, all right, so my resource plays over the weekend, I've had a rough week thus far this week. So EWC is down so far about 1.16%. I am still very, very bullish on these names. Daily chart, you can see we bounced off the 50-day moving average. I'm still confident that we could break out here. Remember, you have stiff resistance above, so let's give it some room. I would not be a buyer unless it breaks out or retests prior support. Here's the Dow Jones leading into the third standard deviation Bollinger Band. In short, folks, it's not supposed to be up here, and I don't expect it to stay, so I would not be chasing this market higher. EIDO, another emerging market play. This is a daily chart. And if you gotten to this point so far, hopefully you're getting some value. May I ask you to please like the video, subscribe to my channel. I'm trying to get to 1,000 new subscribers by December the 31st of this year. So I really appreciate that. And to get these videos in the future, just click that bell to your lower right, and you'll get these videos push notified to you when they're published. All right, so EIDO, next chart up, we have a retest of a breakout point on a weekly basis, a very bullish setup. Yes, it's down on the week. And you may be saying, Bob, it's down on the week. What are you talking about? How is this bullish? Well, remember that traders are OCD. They want to see a breakout above resistance, which we have clearly here for several months. We broke out of that resistance level last week. Now we're retesting to see whether or not prior resistance is now support, and that appears to be the case. So it's very bullish despite the fact that we are down on the week. The next chart up, Facebook. We did get a new weekly high as expected, but when you take a look at a daily chart, we had a bearish key reversal yesterday. Now, if you take a look at some major indexes, such as the IWM on Monday, it flashed a bearish key reversal only to spike higher yesterday. So this market is in what I believe to be blow-off top mode. Anything can happen. Stay limber, because the probability of us after a bearish key reversal of us going lower is fairly good. If you break out above this prior resistance level, well then, that's a very strong validation that the shares want to proceed higher. So on a new breakout, Facebook's a buy. But the probability is that, especially after it couldn't rally with the rest of the market yesterday, the probability is that we'll get a pullback on Facebook. I'm not saying it's going to collapse. I'm just saying that we should get a pullback, and that could be the pause that refreshes. Tech data. All right, this is a biggie for the week. A number of my members got involved with this one, and we have, so far this week, we're up 11% on the week. This is one I've discussed on best stock charts. Go back to it. I'll link to it at the end of the video. We had a bull flag formation, a strong breakout this week. We broke out on Stokes. We broke out on RSI. You'll go back to the best stock charts video. You'll see I haven't changed these lines. This is what we were looking for, a breakout. We got it. Daily chart. Would I buy the shares now? No. Can they go higher? Yes. Too much risk, not enough reward to buy them here. You have a lot of overhead supply. I would be looking to book profits right now. Halcon Resources weekly chart. I still like the shares. It's another resource play. And it's becoming very interesting in the fact that it's nearing the lower band of support, which could act as a good entry point. And why you want to buy at support is because you can just put a stop loss right below. And if it's triggered, you can be fairly confident that the shares will probably continue lower. Now, would I go aggressively buying at this lower band of support? No. I would want to scratch that itch. If I wanted to buy the shares, then look to buy the breakout. We have an inverted head and shoulders set up, left shoulder, head, right shoulder. Despite the fact that we're down 4.5% on the week, does not make me bearish on the shares. In fact, they're more interesting than ever. HK looking good. Google. Another stock that I spoke about on best stock charts last weekend, and we did break out this week. Good stuff, right? The problem is, daily chart, much like Facebook, it couldn't rally with the markets yesterday. That's a tell. That's the market sending us a signal. And in fact, when you take a look at Google on a daily basis, we broke out on Monday. Yesterday, we had a bear trap. We broke down and closed below what should have been support. Now, could we gap up today and recapture it? Sure. But if we make a new continuation move lower, new daily low, look out below for Google. Volume to the downside was very high yesterday. So we had institutional distribution. Caution flag is on the track for Google. Luminix. Another one I spoke about this past weekend. We're down slightly on the week. No big shock here. We did have topping tails. What topping tails imply that? What you're seeing are sellers from back here, back here, back here. They want their money back. And so they're selling strength. Daily chart. So what we're going to update this chart. I'll be right back. Take note of what we're looking at right now with no lines. I'm going to throw some lines up here and show you exactly why you should be annotating your charts to identify good risk-reward entry points. All right, so here you have it. We're in a triangle formation, and yesterday we flashed a bullish key reversal, meaning that we traded weak in the morning, only to rally back strong by the end of the day. Did it rally with the market? Pure and simple? I don't think so, but maybe, right? So what we want to do is we want to wait for a breakout above this upper band of resistance to validate our opinion that the shares should be moving higher. I will caution Stoch RSI, a bit choppy here. You want to see conviction on Stoch RSI, like right here. A brief pause here, but from oversold to overbought fairly quickly. Right now we're getting choppy action, and I don't like that. The last time we saw that was back here, and look at what you got. So does that mean you avoid the shares and you don't buy them? No, because this picture can change by the end of the day. You can have this line on Stoch RSI trading well above the 0.8 level, and the shares trading above and closing above, more importantly, the upper band of resistance. So more to come on this one. It remains a watch. LABU, not a good performer this week, still a watch. And in fact, on a weekly basis, the week isn't over yet, still a couple of trading days left to go. We have both lines on Stokes trading down below 50. If they close out the week like that, we will certainly avoid these shares. Members understand why I do that. Daily chart. All right, so on a daily basis, we have no breakout anywhere. We have lower highs on RSI and Stokes, but guess what? We also have lower lows. So they're trying to find a bottom here. Whether or not they'll be able to do that is anyone's guess. And it's pure and simple. If you bought where we closed yesterday, it's a guess on where the shares are going to go. Right now, the path of least resistance appears to be to the downside, so I wouldn't buy them until we hit a support level or until we broke out. So I would avoid these shares right now. NI, daily chart, a good day yesterday, but not quite a breakout. We did see a doji star formation. I don't like the fact that we have both lines on Stokes trading down below 50. That's a cause for concern for me. RSI, though, hooking up, looking good. Weekly chart. On a weekly basis, we retested the breakout point, and in fact, we were trading down below it. Now, I think that in all probability, we will, let's update the chart. Okay, so I added this upper band here, this upper line, to reflect resistance. And if we rally up and through this upper band of resistance by Friday, the shares are a buy. Right now, they're a watch. No change in our opinion from last weekend. KSU, Kansas City Southern, nothing to do here. I think the chart is looking good. I expected it to move higher this week, and it did. But we don't have a breakout yet. The inverted head and shoulders setup is still intact. Left shoulder here, right shoulder here. No breakout yet above the neckline. The Stokes are looking really good, though. I will say that. But the week isn't over. Let's take a look at the daily chart. Now, on a daily basis, we broke out. But we did so last Friday. And as I mentioned earlier, with one of these symbols, I think it was EIDO, if you go back, we got our retest of the breakout point. All good stuff. We broke out last Friday, pulled back and retested on Monday, then again Tuesday. Yesterday, flashed a bullish key reversal. So KSU appears to have the wind at its back. Good volume yesterday. Very nice. All the indicators are looking good. So if you're a good, disciplined trader and you're willing to book your profits at 109 and wait for a breakout on this upper band of resistance, back to the weekly chart again, a close above this upper band of resistance on a weekly basis, good. Book your profits, book a couple of points, that's fine. But I wouldn't go into the weekend with these shares trading into resistance. I would wait for the breakout above resistance on a weekly basis. SCCO, Southern Copper, another one where I talked about it over the weekend. I like the resource plays. I still do. This is a weekly chart. It's down about 2.42% on the week. The week isn't over, though. And the tax bill that caused the rally yesterday with the announcement out of the Senate that they were going to push forward with the tax plan is the same reason why names like Southern Copper, gold, the emerging markets should all rally. Why? It's because it's not necessarily a growth package. It's certainly inflationary because they do not pay for the tax cuts, nor do they cut spending. Therefore, it's inflationary. So I would look for these names to firm up in the coming days. Celanese Corp, we were looking for a breakout over the weekend. We got the breakout, but the week isn't over yet. It's just, let's call it at resistance, okay? Let's be conservative and not speak our book here. Let's say it closed at resistance yesterday. That doesn't mean it'll close there on Friday. Daily chart, no breakout yet on a daily basis. I would wait for a new daily high and a retest of the breakout point before I got involved with CE. Lear Corp weekly chart. We spoke about this one over the weekend. We expected a continuation breakout. We got the continuation breakout. We're up 1.2% on the week. Daily chart, a strong day yesterday, very strong, up 1.91%. I think that Lear Corp presses higher. TV, Grupo Televisa. All right, this is one that we have been expecting to hit a support level. Let's go to the daily chart. And it hit one of our support levels yesterday. And we're prepared to begin accumulating shares aggressively once we hit support level number 2. Now we have RSI at 11.41, very attractive. That does not mean it can't go lower. Yesterday, it really got clubbed like a baby seal, but it bounced off of its 2 standard deviation. Bollinger Band volume is still high. So I think that this sell-off, while we may have some more downside potential here, I think that it's very, very close to an end. So for those members listening, get ready for a good time soon with TV, because we will be aggressive buyers fairly soon. And that's it for this morning, folks. Please, if you want these videos in the future, click that bell to the lower right of your screen. Subscribe to my channel. Leave a comment below. I'll get back to you if you have any questions. And give us a like if you would. I'd appreciate that. Again, we're trying to reach that goal of 1,000 subscribers by December the 31st. Have a profitable trading day. Be well.